Welcome back, everybody. Today we're going to talk about exit strategies. Eventually, we need to exit our properties. And by exit, I mean either sell or refinance. And that is usually due to investors that want their money back, their initial capital. Owners want to invest in a different project. The owner wants to exit a specific market. They don't no longer want to own multifamily. And also, we're going to talk about when to exit. Exit to return of capital. This is probably one of the most important things in a syndication. Syndication typically have a set time frame that could be anywhere from 3 to 10 years, depending on the business plan. When the business plan has been executed, the property is typically sold to return the investor's capital and any gains. Sometimes the property is also refinanced and the investor's initial capital is returned, which is awesome because at that point, if you have no more of your initial money invested, you actually have an infinite return on your capital. Sometimes an owner wants to invest in a new property. Let's say you've collected a bunch of smaller properties, duplexes and fourplexes. Maybe you find an awesome 50-unit property and you want to sell your smaller property to invest into a larger deal. This makes sense from consolidation, scale, better management, and maybe even a nicer property. Sometimes it makes sense to exit a specific market. Maybe this market is not desirable anymore, declining population, poor economic outlook, high taxes. And you also got to be careful about that. If you see those signs, it may be good to exit before everybody else sees them. So if you kind of have the feeling that this doesn't make any sense anymore, maybe a good time to consider exiting that specific market. Sometime an investor wants to completely exit multifamily. Maybe an older owner decides that it doesn't make sense anymore to own properties. And at that point, seller finance may be a good option, especially because if you've owned a property for a long time, you probably have a huge tax bill. You could do a 1031 exchange into a new property as well. You can perhaps let the children take over and run the property that way. Or you can also sell in the open market. As I mentioned, that probably has some tax consequences. So when is a good time to exit your investment? That's hard to answer, but I've heard a quote that says, if you're not buying, you're selling. That means that if you look at your portfolio and you wouldn't buy that portfolio again, you should probably get rid of that because it means that it no longer meets your investment goal and philosophy. And also, it could be a good time to sell if your property has met the profits you expected, if your loan is coming due soon, or if there are better options in the marketplace. So hopefully that was helpful, just a quick overview over exit strategies. And as always, if anybody's interested in getting on their free call, they can go out to my website, opendoorscapital.com/call, and I'd love to talk to anybody. Thank you. And next week, we're going to talk about syndications and what it means to invest in a syndication.